Cava shares down lower this morning after the fast casual chain reported second quarter revenue and same-store sales that missed estimates. The company also trimming its sales outlook for the year as it tries to top last year's very strong numbers when it added grilled steak to the menu. And joining us right now is Brett Schulman. He is the company's CEO and a bit of a brave soul. I give you lots of credit to come on TV on a morning like this and not to overplay it or downplay it, but the stock is off nearly a quarter this morning. About 25%, 24, a little over 24% right now. So before we even get, how are you feeling?
I feel good.
This is not throwing you for a loop?
Listen, even before our IPO, I told the team, stocks will go up, stocks will go down. But what really will define us is how we build this over the long term. We're not doing this for the next 10 weeks. We're doing this for the next 10 years and beyond. And so we're focused on that. And when you look at some of the metrics in the quarter, we beat our EBITDA, we beat our EPS, and our new restaurants in 2025 are trending at record level openings at $3 million plus run rates. So we're more confident than ever in the large scale white space opportunity defining the Mediterranean.
And so what do you think's happening? I mean, I think the investor class is saying we expected you to continue to beat. We thought the forecast was going to be up and to the right, and it is not that way.
Well, markets can be short-term focused and very focused on same restaurant sales, which we did come in under expectations. And so
when did you start to see that happening?
So we did enter the quarter on our run rates as we expected. And then in June, we saw a pretty pronounced deceleration. But that also coincided with our year-over-year lap of our steak launch last year, which was our most significant protein launch in a number of years. And as we started to work through the quarter, we started to regain momentum and re-accelerated comps at the end of the quarter.
Okay, so what are you seeing, though? What do you think? What is the issue in your mind right now?
I think for us specifically, we are comping significant hurdles. If you think about on a 3-year basis, we grew traffic in the quarter 20%. Our AUVs have gone from 2.3 to 3 million during that period. So certainly high hurdles. And then I think there is macroeconomic uncertainty. I like to use the metaphor, it's like consumer trying to navigate through the fog. The fog has gotten denser at moments. It's gotten lighter when they pass the budget. I think that gave consumers certainty, whether you liked what was in the bill or not, at least gave you clarity. And then now we've got some shifting tariff policy that creates fog again. So we're just trying to focus on delivering a great value to our guests when they're feeling that fog or pressure.
So tell me what you're feeling on the labor front and what you're feeling on the product front, meaning the food and other wholesale stuff that's coming in that you need to actually buy to make the food for folks.
We haven't seen inflationary pressures to date. Got to give a shout out to our supply chain team. They've been incredibly agile, really mitigating any cost pressures to pass through to our guests. Remains to be seen what's going to happen at the end of the year, but no pressure on the labor front either.
Okay, but hold on. So on supplies, you're saying no, there's no pressure.
No, when you put the puts and takes together, and again, that's our job. That's our responsibility to try and work on behalf of our guests to mitigate any of those inflationary pressures we may be seeing by offsetting it with the other efficiencies in the business.
Okay, so tell me how you're doing that. Because, by the way, that is the central issue for so many businesses that are bringing in goods from outside the country. So first of all, what goods are you bringing in?
Yeah, so our olive oil from Greece. We do get some hormone antibiotic-free beef from Australia, and then some basmati rice from overseas. So the rice crop was great this year, so that helped offset any tariff pressure on that front. And then when you think about how we've architected our supply chain over the years, we do source a lot domestically. We are a domestic manufacturer. We have our 2 production facilities where we're vertically integrated to make our dips and spreads, which also helps pass that cost effectiveness and efficiency to our guests.
When you think about the rice, when you think about the olive oil, is it possible over the next year or two that you think you could be sourcing that domestically?
With the specificity of the ingredients.
That's the problem, I imagine.
Yeah, there's some of it. I mean, there's certainly things we can shift domestically. There's others that we're going to source overseas, and then we're going to work to make sure that we don't have to pass those costs along to our guests.
What are you seeing? So, okay, and that's the other question. Are you eating the costs?
No, if you look, we beat on restaurant level margin. We had 26.3% restaurant level margin while absorbing any of those pressures around us.
Okay, what are you seeing in terms of the strength of the consumer to the extent that you think you're a barometer of what's going on? Are they trading down? Are they trading up? What's happening?
Yes, I think relative to our peers, we put up a positive comp when you've seen a lot of people put up negative comps. So clearly when people are choosing to eat out, they're choosing to eat out at Cava. So we're very excited about what we've seen and, again, the long-term trajectory of the business and the structural strength we see underneath.
Okay, can I just ask you almost like a philosophical, psychological question?
Yeah.
So you introduced steak a year ago.
Yeah.
You know that that's working in a big way.
Yep.
I imagine you say to yourself, this is working, but this is actually a problem for me. insofar as you say to yourself, talk about the hurdle, like this is going to be a tough comp.
Yeah.
When did you say to yourself in the past 12 months, we're going to get to a point where maybe this is going to be tough? And when you're thinking that to yourself, are you also looking at the stock and saying, you know, I wish it wasn't actually so high?
Yeah, that's the perverse nature sometimes of the public markets where, you know, you have to comp the comp, so to speak. And, you know, we could have done that. And we're going to launch chicken shawarma here in the first week of September, which is going to be another new protein launch. We could have accelerated that and launched it in June to match up with our steak launch of last year. But we didn't think that was the right thing to do for our operations team or for the business. And again, we've tried to position this business for the long term. Very strong balance sheet, free cash flow positive, self-funding 18% plus unit growth, so that we don't get unduly influenced by short-term decisions that the market puts pressure on, and we can stay steadfast on that long-term strategy and build the next large-scale cultural cuisine category.
Okay.